Just give you a little background on what it means to the meat business. As the introduction said, as I've been involved in it for quite a while, and I think that we have the potential for it to be very transformational with some of the agreements that are on tap. We would far prefer a WTO agreement. That would be the answer for a lot of us. The reality is that I like the phrase earlier, if it's not, it's dying or dead, whichever you're an optimist or a pessimist, but either one is I think, a apt description of it. So we need to have some of these bilaterals and regional trade agreements. It was interesting to see some of the information there on the history of some of the free trade agreements and maybe the lack of impact. I think that's changing, or at least my view, being a non-economist, I think that's changing because I think everyone is more proactive on deeper cuts. So I think the potential for some of these free trade agreements that we have coming forward is much greater and therefore having much more impact. There's been a lot of around the edges negotiation, but hopefully this time around we'll see some significant changes. Just to give you a little background on the Canadian Meat Council, it's one of the things that I think a lot of people don't understand or don't realize, that 67,000 or 67,000 plus people work directly in the meat industry, 1,100 establishments, most of them family owned. And it's the largest food industry by revenue, manufacturing in the food industry, and 11th largest in Canada overall. So something that I think that we tend to fly under the radar a lot, but in fact is having a big impact on the economy. On the pork statistics, just to run through a couple of them, pork production 1.9 million metric tons, of which 1.1 million is exported. So obviously, from the pork perspective, a critical thing is exports, and we have to continue to open up new markets to be sustainable. On the beef side, 3.2 million head, 1 million metric tons, and of that, roughly 408,000 is exported. So John Maswal did a nice job of sort of targeting where they feel the beef market is, where it can go, and certainly we, from my own personal perspective, I think that the potential impact that he outlined is conservative if we can get some real good deals. The other thing we wanted to sort of say, we're connected to farmers, and personally I am a farmer, so it kind of ties in quite a bit. But you can see that the bulk of farmers actually are export dependent in some part of their operation, some more than others, like in the pork and the beef side. So certainly an important part for farmers, and we're an extension of the farm, obviously, because there's not many live animals can go anywhere but the United States, and we are seeing about $1.5 billion worth of animals moving across the line in the United States instead of being processed in Canada. And with more trade agreements, we think we can increase that. We also think we're in a very good position to negotiate free trade. From my perspective, again, the countries that we're actually actively trying to negotiate with, this is total merchandise trade. So all of the countries that we're trying to work with here we're huge trade deficits with on merchandise trade. So from that perspective, we should have a pretty good negotiating position generally on being able to be attractive to some of these. And as you can see, China, $31 billion trade deficit, is obviously an important market for us in the long term. And we're seeing increases in our ability to access these markets, but we really need some more opening of the doors. And if we can get that, China being the largest pork consumer in the world, also producer, but also the largest consumer in the world, will have a significant impact on pork. And as everyone knows, as income levels per capita increase, protein gets consumed more, and beef will become one of them too. And I just want to use one or two examples just to sort of illustrate where I think potentially it is. Japan is one where it was a very closed market for a lot of years or in fact, almost totally closed for a lot of years. And then in the early 80s, they decided to start opening it up through quotas. And then in about 93, 94, they started opening it up to just tarification. So the first tariff level was 70%, then 60, then 50. And then by, I believe it's about 95, 94, they put it to 38.5%. And as you can see, when it opened up, it immediately doubled, and when the tarification came off, imports into Japan are basically 3 times what it was in a short period of time. Or once the 50 went to 38.5% tariff, it basically doubled the volume going into Japan. And those are significant numbers. If you're looking at 700,000 metric tons of pork, or sorry, this is beef, 700,000 metric tons of beef that are imported into Japan every year, that's 2/3 of Canada's production if we sold it all there. Another example is Mexico did a free trade agreement. I believe that was in 2004. They've done a couple modifications in it. Relatively small volumes initially, but certainly their trade with Japan in the pork side has more than doubled, and in the beef side has tripled. And it's a fairly narrow range. They've got tariff reductions on duty, and they also have preferred access on some of the other items. And so from that perspective, certainly a big impact for a fairly minor trade agreement that certainly has helped Mexico. And just to try to give some perspective on this too, because I really believe that Canada is in a very good position to supply particularly Asian markets, but also the European market, and hopefully we get a good deal there. But if you look at it from a producer price standpoint, to me that's the baseline that we have to compete with across around the world. And you can see Canada, this is dollars per kilo on a dressed carcass basis. So Canada at 152, Mexico at 188. So even with a higher pig price in Mexico, they're still able to increase sales into Japan, mostly, and I believe as a result of tariff barriers that have come down that have sort of equalized that differential. So you can imagine, at least I can imagine, how much difference it would make if we had the same tarification reduction that we would have. And you can see the other countries, Netherlands, Denmark, obviously big exporters in the pork side, still higher cost, UK significantly higher, and Italy being very high inside the European Union. And that's what we look at from a pork production standpoint, saying, you know, if we're at 152 and the average in the UK is something over $2, that's roughly a $35, $40 differential per pig. We get the same we get a zero tariff on some of these items. We'll be able to get into Japan, into the European community with some of the product and be able to lift the prices here in Canada, which will help both processors and producers. And then, you know, I think one of the surprising ones to me always is China. At 273, you know, almost 70%, 60% higher per pig cost in China than it is in Canada, and their GDP would be probably, I'm going to say it's about $700 per month per capita. So from that perspective, they spend, and pork is their number one protein consumption. So they are willing to pay more for their pigs in China, and on a much, much lower after-tax revenue basis than individuals in Canada would be. So to me, that's again, you know, China's allowing for more imports. I believe they'll allow for more and more because the cost structure around growing them in China is just greater than it is in Canada. And if we can be a part of that marketplace, that'll be important. And then you can see Japan's protectionism. It's over $4. Still a big market. 1 million metric tons or so goes into Japan every year. Over half the consumption of pork in Japan is imported, but it's certainly a huge differential in tariffs. And that's and a significant reason is because of the tarification in the Japanese market. The other thing that I want to sort of to catch on, I wrote down a couple notes that I wanted to not miss. A good example of a potential damaging one, and I think John Masvidal mentioned it earlier, is the Korean Free Trade Agreement that the Europeans and the Americans have. It's also Chile has it. And we don't yet. Hopefully we get something that's comparable, but that's the sort of the bad side of a regional trade agreement, that if you're not in on it, I believe there's about $200 million worth of product goes into Korea every year from Canada. Within a year or two, if we don't have a similar agreement, that's just going to dry up. So we're going to lose about a $200 million market there, which is significant in terms of the Canadian industry. And if you equate that to a Japanese market or another market that would be similar to that, in terms of tarification, if we're not there, then we're going to be out of our depth as far as being able to sell into that market, because we can have the best quality in the world, but there's only so much premium you can generate, and if you lose an 8% differential, that's going to be a huge thing. The other thing I wanted to mention too is sometimes lose context on it too. In Korea, it's a 40% tariff. In Japan, it's 38.5% tariff on beef. If you think about a chuck, which might be $3 or $4 per kilo, as compared to a ribeye or a tenderloin, which is going to be $20 a kilo, that 38.5% has a huge impact on the value add and the higher value cuts, effectively making it very difficult or almost eliminating them going into the countries like that. So for us to be able to see reductions in that percentage will have a big impact on the higher value cuts as we go along. And that, of course, is a very important part of the overall carcass cutout and the profitability that can be generated by processing and production. So I just want to wrap up again by saying, I'm sure I've got some other notes that I've missed, but I just want to wrap up by saying that I do think that the potential for agreements now is larger than it's been for a long time. The Canadian Meat Council is actually getting more involved because we think this is almost a transformational stage for our industry. It can be transformational. Whether we get it there or not is a question. And from our perspective, it's really critical that we're involved to be able to understand and make the linkage between the production, the processing, and some of these export markets that can actually generate quite a bit of affluence and increase sales. In our case, if we believe that we could actually see an increase of about $500 million of export sales, depending on which countries we get agreements with and when they come into effect. And $500 million isn't a trifling amount. It's, from the Canadian processing industry, it's the equivalent of another, say, $500 to $600 million is another 400 to 500 jobs, and certainly a lot of economic activity. And from our perspective, that's a good thing for Canada and a good thing for our industry. Thanks very much.